1. U.S Iran confrontation dominates. President Trump announced a 5-day delay of strikes on Iran's energy infrastructure while calling for productive dialogue, after earlier threatening to flatten Iranian power plants if the Strait of Hormuz was not reopened within 48 hours. Iran immediately denied any direct or indirect negotiations. Iran warned that any U.S. attack on energy facilities would prompt retaliatory strikes on Gulf energy and desalination infrastructure and U.S.-linked assets, and Iranian lawmakers even signaled that financial institutions holding U.S. treasuries could become targets. The IEA reported at least 40 major Middle East energy assets seriously damaged, said the supply shock from a Hormuz blockade is historic, and signaled potential additional releases from strategic reserves. Recovery could take a long time, keeping oil prices elevated. Markets reacted with extreme oil volatility. Brent and WTI swinging around the $100 mark, with a Brent WTI spread widening over $14. Goldman Sachs pushed up short-term price forecasts. Stocks leapt on the strike delay, then swung. Gold and silver fell, then partially rebounded, and the 10-year Treasury yield ticked down modestly. Overall, a persistent risk premium remains. Number 2, global markets and investors rattled. Escalating Iran conflict forced market participants to reprice risk, sending Brent to roughly $112 to $130 and WTI to about $98 to $99, with the Brent-WTI gap exceeding $14 and banks like Goldman Sachs sharply raising near-term oil forecasts. The IEA's large SPR release has been used, but analysts warn further releases may be needed if Hormuz remains blocked, and equities and futures plunged into multi-month lows. Russell 2000 is more than 10% off its January high, while VIX rose and safe haven demand for the dollar and large caps increased. Bonds saw selling and higher yields as expectations for Fed rate cuts this year faded. Investors increased cash and deleveraged, moved toward defensive large caps and energy names, and warned that a prolonged shock could fuel stagflation risks that complicate central bank policy. Short-term volatility has been extreme, with rapid reversals on political signals such as the U.S. strike delay, and while some experts point to historical recoveries after regional conflicts, a sustained disruption would materially raise inflation, logistics, and energy supply shocks. 3. Travel disruptions mounting. A partial government shutdown since mid-February has left TSA officers unpaid, triggering resignations and absenteeism. DHS reported more than 400 departures, and some airports seeing 20 to 40% daily absences, causing closed screening lanes and long security lines. Reported wait times surged. Atlanta, 153 minutes, JFK, 75 minutes, Newark, 44 minutes, LaGuardia, about 20 minutes, with official queue feeds like MyTSA not being regularly updated due to the shutdown. The administration deployed ICE agents to help ease airport congestion, sparking questions about authority and fit, while transportation officials warned that prolonged shutdown could worsen operational disruptions and force flight cancellations. Compounding the chaos, an Air Canada Express CRJ 900 at LaGuardia collided with a runway crossing fire truck during landing. 2 pilots killed, many injured, firefighters hurt, leading to prolonged airport closure, FAA ground holds, NTSB and Canadian probes, and roughly 500 to 600 reported cancellations. Travelers are urged to arrive much earlier than usual, with domestic passengers advised to allow up to 3 hours. Before, India weight loss drugs and Pfizer Lyme vaccine. With Novo Nordisk's semaglutide patent in India expiring, local generics flooded the market at up to 80% discounts. Sun Pharma and Dr. Reddy's launched weekly monthly pricing far below brand levels, and others like Natco and Alchem offered even cheaper options. Novo cut prices by 37% and is leveraging partnerships, brand strength, and care ecosystems to defend share. Analysts note India's huge diabetes and obesity population makes it strategically important. Challenge.